So Singapore's economy is either contracting or growing depending on which statistic you're looking at. Well, let's explain. Year-on-year GDP in the third quarter shrank by 7%, improving on a 13.2% plunge in the second quarter.
But slightly worse than the negative 6.8% economists had expected. The reason? Well, the construction sector remained extremely weak even as manufacturing returned to growth.
Well, quarter-on-quarter, GDP in Q3 rebounded by 7.9% thanks to the gradual reopening of the economy in June after the two-month circuit breaker.
Today's figures are based on advanced estimates by the Trade and Industry Ministry.
We're happy to have Song Seng-Woon on the show to make sense of the latest figures. He's an economist at CIMB Private Banking. Now, Seng-Woon, manufacturing was the bright spot in Q3. Services producing industries also saw improvement, but the construction sector remains weak. So when do you think we'll be able to see a more broader-based recovery?
I think we all like to see it broadening far more quickly than what we are currently witnessing, but obviously the challenge remains. The pandemic is still resurfacing, it's still, I suppose, spreading in different parts of the world. The challenge remains. Some industries still will be facing significant headwinds. For instance, last December, we saw over 1.7 million tourists. On average, we saw 1.6 million tourists last year. We are going to be very well short of that figure, even as we open up travel lane, green lane, because these are still very much for business-related travel. So we are going to be significantly short of visitor arrivals. Obviously, that will have implication for those in the travel, leisure. So that's an example where some industries will still be facing significant headwind, whereas those within Singapore that you and I participate in terms of consumer-facing industries are seeing better numbers, but they are also not completely out of the woods yet.
Lots of numbers today for the report, Seng-Woon, but what do the numbers mean for the average person? Does it translate to job security, career progression, and even zero pay cards, among other factors?
Yeah, we are all keeping our fingers crossed. Obviously, the longer the recession drag on, yes, we have seen a significant recovery quarter on quarter, basically because we have seen restriction being eased. The challenge is maintaining that recovery, the pace of the recovery going into 4Q. So I think jobs continue to be at risk, even though we have done quite a bit in terms of trying to create, maintain, or even retrain some jobs to create opportunities. So bottom line here is there's still risks, labor market, there's still job cuts that's still to come. So for all of us, it's really about keeping our fingers crossed that we see more broader based recovery, but that will be taking time over the coming quarters. So it is still, I think, very vulnerable as far as jobs and the job market is concerned, given that the recovery is still somewhat bumpy and uneven.
Now, Seng-Woon, separately, Parliament is debating the third supplementary supply bill, which provides for an extra $8 billion in COVID-19 support. Definitely helpful for Singaporeans. But what are the risks of prolonging government support?
If we look at I suppose, government finance this year, it will be a fairly deep sort of a budget deficit. It will be the worst as far as Singapore history, short history is concerned, in terms of we having to spend more, providing relief measures, providing to businesses, to household, to the vulnerable segment of society. So all these things essentially means that it provides some support and cushion the impact on the labor market, in that the unemployment rate could have been worse if not for the fact that businesses were incentivized to retain workers. So I would say the government is still, I think, expected to register a budget deficit, perhaps smaller one next year versus this year. So it may be that kind of scenario we continue to see, where the government support still is very important as private sector investment is perhaps slowly coming back. So that's essentially the key. If private sector is spending less or not confident enough to spend as much, government sector comes in to provide the support, to create the jobs, to essentially just cushion the economy as we await a broad-based global recovery that would then lift Singapore. Remember, Singapore economy is very dependent on external trade in goods and services that 3 times the size of the economy. So we need external wind to sort of, in a sense, get going again. But we obviously don't know to what extent, when and how that will come through to lift us up. So government spending, I think, will still be quite critical as we head towards the end of this financial year and at the start of the new one.
Great insights there, Seng Woon. Thanks for coming on to the show. I've been speaking to Song Seng Woon, economist at CIMB Private Banking.